Hi, thank you for joining me. Today's day is January 19th, 2019, and it's currently 8 p.m. Eastern Standard Time, and it's Saturday, which means the market is closed, but we're still going to do some video for you so you can see what I've been doing and working with. So I'm going to bring up my screen share, and so you can see what's happening. And here it is. So this pair is New Zealand dollar, United States dollar, otherwise known as NZDUSD. And being that the market's closed, we're not going to see much movement. But the pattern is still there. The trade is still in it, and it's still going. So this is a very good time to learn specifically about this trade, this pair. The trend it does, the support, resistance, all the indicators, it's right here. Now, I've been asked why I don't put indicators on my chart. And as you can see, it's a naked chart. The reason it's called a naked chart is because all you have on it is the stop loss right here, the entry price, which is right here, the green line here, and the take profit, which is the red line right here. The reason I don't put indicators on it is because my health issues make it so I forget everything every single night as I sleep, and relearning how to function, know what to do, where to go, and all that makes it interesting, because with that and learning how to do business and learning how to trade again, as well as all the indicators, guidelines, trend lines, support, resistance, all of that, all over the chart, is a bit overwhelming to say the least. So that's why I've chosen to do a naked chart to make trading in the Forex area of the market as simple and easy as can be. So all you really have to do is know how to read a naked chart, and I'll show you how. Now, isn't that good? Okay, so my entry price on this, before I go any further, it's a lot size of 0.01. It's the lowest amount on a lot size. And I keep it to that because this is for training. This is for people that may not know what to do, how to do it. So you keep the minimal on your lot size depending on your balance. When I started this trade, this specific pair was back in June, and I had $280 in my balance. If you take a look down in the left-hand corner, it says balance, and you can see where it's built. Now, don't get me wrong. All of that is not towards just trading. I've actually added to the balance so that my margin level is at the 8,392.06%. Many people will tell you that you need to keep your margin level above 100%. Well, that's not completely accurate. You let it go to 100%, and the broker you're trading with will empty your account. They don't like allowing you to lose so much that you're 100% in your margin level, and the margin level's right here, about the mid-bottom part of the screen. If you get it down to that 100%, the broker says, okay, he or she are losing too much, we're going to shut this one down, because they'll lose it, but the broker won't. That's how they work. So my comfort level on a margin level is 2,500% minimum. So I can sit and let the trade run. I don't have to be staring at it 24/7 or I'm sorry, 24/5, because the Forex market's only open from Sunday at 5 p.m. Eastern to Friday at 5 p.m. Eastern. So there's only 5 days there. I don't have to sit. I don't have to watch it. I can have a life. I can set my trade, set my entry price, my stop loss, and take profit and walk away and let it do its thing. What better way could you have, right? Not being glued to a computer screen for that long, no more than maybe 30 minutes a shot, 2 to 5 times a day, 5 days a week is not that big of a deal. And it can be done that quickly, every single time. So let's get on to this trade, shall we? My entry price is sitting at 0.69586. And that is this green line that I was telling you about right here. My stop loss is at 0.62586, and I'll go down into the 4-hour time chart so you can see just how many pips that is. By sitting on the stop loss, it's showing me that my pips are 7,000, a negative 7,000, and a negative $70. The reason it's negative is because stop loss. That's the most I can lose out of this trade. I can't lose any more than that, because as soon as I drop there, the broker and the trade, the market actually says, oh, wait a minute. She doesn't want to lose anymore. We're going to shut this trade down. And they do. But it's not going to take my balance because I have more than enough to cover it. So that's why that's at 7,000. And my take profit is at 0.76586, which is also 7,000 pips. And a pip is a measurement, almost like a penny when you have a 0.01 lot size, and $70. And those are profit. So when my trade goes into profit and this entry price is looking good because the trade is above that, around 500 to 1,000 pips, I actually move my stop loss above my entry price. So it's a win-win. It's a no-risk trade. It might come down to the new stop loss, but it's been moved above my entry price. So no matter where it comes down, I'm still going to make that profit. And if I choose to, I can go back into the exact same trade, just have my stop loss up higher, my entry price up higher, and my take profit up higher. It just works. So I could be in this trade for months, if not years, because while you're looking at it, the day time chart goes back to May 1st of 2014. A good amount of time, over close to 5 years. And that's why I sit in the trade. That's why I stay in the day time chart, because looking at it, when you trade, you put your cursor where the trade currently is, which is right about there, and you look right to trade, but you look left to see what the pattern is. And as you can see, I take my cursor and I run it to the left until I have pretty much the same pattern as previously, which I would say is right about here. Right there. And because of that, I can see it's going to hit down here, but it's about to turn around and go into profit. Trades always repeat themselves. It's consolidation, you know the name, the word, consolidate. for quite a while, and it'll stay there for quite a while, but it will turn. It will come back up. As you can see, the trend, the head and shoulders right in here. See right this? And right here. And the test, it's testing the entry point and resist and turning. It even broke through a little bit here, but it's turned and gone back up the other direction, and it's retesting. When you find a trade, a pair that you want to do with, you see it, you do not want to enter a trade without it retesting. Don't enter without a trade retesting, because it's going to tell you if it's a good place to enter or a bad place to enter. Now, you don't want it if it's breaking through and going the opposite direction, because that's a quick way to lose your balance. We don't want that. And on a different note, if you haven't been trading for a minimum of 90 days in a demo account, 90 days of trading, not 90 calendar days, but 90 days of trading, do not do a live, because you do need to get the education. You need to learn the skill, and it takes time. Don't rush it. Now, I've been asked, why don't I go into the smaller time charts? Well, here's why. Going down in the minute time chart, what can you see here? There's not a lot of information. One, because the market's closed. But two, even that, there's not a lot of information. You don't have a clear picture of it. And where would you put your stop loss, your take profit, and your entry price? Not many can tell. Going into the 5-minute time chart, there's a little bit of movement, but still, you can't see what actually needs to be done. And without your indicators, without your marked up chart, trading in the smaller time charts from 30 minutes on down is extremely risky. Chances of you holding on are kind of slim. However, every now and then we have someone that is very on it and will succeed. But that's not often. It's like 1 in a billion that can actually do that. So, going into the 15-minute time chart, there's more information. Like I said about the 1 and 5 minute. But it goes back only to December 27th. Not even a month ago. Are you sure you want to risk your balance on that? Without the indicators, without marking up the chart, without knowing what you're doing? It's extremely risky. Don't do it unless you want to be very good at losing. But when you do lose a trade, it's not considered a loss. It's considered a lesson. Because if you're doing it right, you're marking down your trades, you've got a trading journal, then you will be able to see where you went wrong. And you can tweak it so it matches more of what could be a win. And I say could be, because Forex trading is extremely risky, and there's no guarantee. Past profits does not guarantee future income. It just doesn't do it. So be careful. And before you know the skills, before you've gone through the education, don't do live. You'll be thankful you didn't. Going into the 30-minute time chart, now there is more information here. And looking at this, I still wouldn't tell you where to put your things without a marked up chart. I wouldn't tell you where to put your entry price, your stop loss, or your take profit, because it only goes back to December 5th of last year. Still not enough time. There's not a clear picture here. And that's your 30-minute time chart. Going into the hour time chart, this is just 1 hour. And it goes back to October 23rd of last year. Granted, there's more information, and you can see more of the trend that this trade is doing. But do you have a clear picture of it? Do you understand what you're looking at? If you don't have the experience or the knowledge, I wouldn't advise it on a naked chart. Going into the 4-hour time chart. Now, I have to be honest. This is where I used to stay. And I had no problem with it. But I also marked up my chart. I also knew what I was looking at because I hadn't had the seizures clearing my memory as much at this time. I still had them, just not as much. And I would trade in the 4-hour about 6 months ago now. And then I realized it's still not giving me a complete, clean picture, a trend that the trade's doing. So on a naked chart, it's highly risky. But if you find that you are a scalper or a short-term trader, have fun, enjoy it. But as soon as you start to get agitated or you get where your hands are glued to your balance, or you get angry, or you're not comfortable, you have to be glued to the computer, it's time to change your time chart so that you can have no emotion, you have consistency, and you have patience. These trade pairs, this one specifically, takes its time. It does not rush. It takes its sweet time, and it can drive you crazy if you allow it. So have no emotion, and it doesn't allow you to. You don't allow you to have that emotion that you have to sit on your hands or you're just going to do something, because that's when you lose, and you don't want to lose. Now, being in the daytime chart is where my comfort zone is. And this is where I like to be, because I can see, looking at the naked chart, the trend that the trade has been doing for an extended period of time, close to 5 years to be exact. And I can go left and mark it with my cursor, and I can see the pattern, the trend line that this trade has been doing. The test and the retest, the head and shoulders, the inverted head and shoulders, a flag right there. There are many indicators in here. And granted, at this time of day, I have the memory of trading. So it's back. So I don't have to worry so much about, what do I need to do? I don't need to mark up my chart every day, which is what I would be doing because I don't remember it. So I'm relearning, and that can be overwhelming for almost anyone. I'm going to stop my screen share right here because I want to talk to you one-on-one. Now, I've been told, or asked, where do I get my signals? Well, my signals come from 5 different areas. Stevenson Lindor and Orrin Wright, who are educators through iMarkets TV. They take from beginner, never seen a chart before, to even know what a trade is, to intermediate, oh yeah, I can do this, to advanced, I've got this hands down. Both of them are doing that. Then we have Christopher Terry, who is the CEO of iMarkets Live, and he has over 25 years of trading experience with a very high success rate. I don't know anyone better than to trust him with if he says, hey, do this, or hey, look at that. Pay attention. He's got so many golden nuggets for you to hear, so many gold nuggets to look at. Then the next area is Tracy Walker, who happens to be my sponsor with iMarkets Live. And she runs summits and webinars that teach people from very beginner, infant stage, as you might want to say, to intermediate, to advanced, she shows you where to get in a trade, where to get out, how to mark up your charts, how to do all the little nicks and crannies on a market in a specific pair, that you are at ease, that you can be comfortable with it. And then the last area where I find my signals is what is called swipe trades. Now, swipe trades is an app that you put on your smartphone. And once there, it gives you ideas for signals, for trade pairs. They're called ideas because they cannot guarantee that you'll succeed, but they give you an idea of where to look to follow your guidelines, follow your rules, then enter into a trade. And once you've got the education and the knowledge and know-how, following all those rules and regulations, piece of cake, no big deal. You don't have to think about it. Not everyone is as quick as you might think. So it may take them a little longer, but they're gonna get it. Now, having said all of that, my question to you is, are there any questions that need to be asked? If so, feel free to put them in the chat or unmute your line and ask me here. Now I'll stop my stability and we'll give you a few moments to see what's going on. Okay, now I know I gave a lot of information and there's nothing wrong. If you don't have questions right now, feel free to reach out to me, either through YouTube in this video or on Facebook at Cat's Corner Skags. And I'll be happy to answer any questions you might have. How do you get started in iMarkets Live? As well as what do I do now? Are all the type of questions that I'm looking for. Yeah, I have a question. What would it be? Chris, go ahead and ask your question. Do you want to unmute or do you want to type it in the chat? Is there excellent training to understand what you share? Yes, there is. And that's through iMarkets Live. So that's not a problem. They have 60 plus videos talking about everything I've talked about, as well as through Tracy Walker. So to your question, absolutely 100%. It's just who you associate with and who you can listen to and understand. There are many educators that will answer your questions and show you the right way to understand it. Does that help you? Is there specifics in what it is the individuals want to know? Yes, we go through the terms on what certain words mean, as well as how to set things up in your chart, as well as anything you have. There are words that you can click on that will give you a dictionary approach to begin with, and then they'll show you what they're talking about. Are there any other questions? Are there specifics on what to look for? Yes, there are. That's when we're talking about they start at beginner, the people that have no idea, that go through every single step of the way. Do iMarkets Live and iMarkets University. Keep in mind all these videos. Yeah, a beginner can definitely do it. All these videos are recorded, so you can go back in and watch them over and over and over until you get it. No one's gonna care. So, if there are no other questions, I'm gonna give you a moment or two. You're very welcome. Thank you for asking, Chris. So going once, going twice, and gone. Thank you for joining me once again. And you go and have a fantastic remainder of your day or night, depending on where you are when you're seeing this. And I'll see you all on Monday. Bye for now.